I'm Matt Bishar with NAREITWeek.com here in New York City for REITweek 2015, NAREIT's Investor Forum. Joining me for this CEO Spotlight is Mike Landy, the President and CEO of Monmouth Real Estate Investment Corporation. Mike, thanks so much for joining us.
My pleasure. Thanks for having me.
Now first, can you start by talking a little bit about the company's acquisition and development pipelines for the remainder of 2015?
Sure thing, Matt. Our acquisition pipeline now consists of 2.3 million square feet, representing $250 million in new Class A build-to-suit industrial constructions currently in progress. Our fiscal year end is September 30th, so several of these projects won't be coming online until fiscal 2016. But all told, by the end of fiscal 2015, we will have generated a 30% increase in our gross leasable area. And we anticipate solid double-digit growth in fiscal 2016 as well. We're very picky at Monmouth. We only invest in single-tenant, net lease industrial properties on long-term leases to investment-grade tenants. Our recent acquisitions include properties leased to Jim Beam, Ulta Cosmetics, BE Aerospace, and of course our largest tenant, FedEx.
And interest rates and the impact on real estate continues to be a hot topic. You know, it's one of the hot topics here at REITweek. Yeah. What impact would a change in rates have on Monmouth, and has the potential rate hike factored into your strategic thinking?
This protracted period of historically low rates has been very beneficial for Monmouth and all REITs for that matter, because it's enabled us to substantially reduce our highest cost, which is our interest expense. Monmouth recently was able to lock in sub 4% financing, fully amortizing over 15 years. And so the benefits of this extended period of low interest rates will be felt for many years to come, long after the inevitable tightening begins. Strategically, one should assume higher interest rates going forward. I think one day we'll look back on this period of negative short-term interest rates and say, did that really actually even happen? And it did happen, and it's still happening. But looking at the public REIT market as a leading indicator, I think the market is saying it wants to see higher yielding REITs going forward. Meanwhile, in the private market, industrial cap rates continue to compress. They're at historically low levels, but we're anticipating higher cap rates in the not too distant future.
And lastly, we've talked in the past about how e-commerce has sort of reshaped the industrial space. But from a tenant space demand, how is e-commerce, rapid delivery, how is that changing what you're hearing?
Well, the obvious factors that people always cite are larger buildings, higher clear height, additional parking, larger truck courts, greater acreage. But no question, e-commerce is a huge driver of industrial space demand. Our most recent acquisition was a 680,000 square foot e-commerce fulfillment center. It's leased to Ulta Cosmetics in Indianapolis. We purchased this facility for $37.5 million, and our tenant, Ulta Cosmetics, has made a substantial investment in the infrastructure, the e-commerce infrastructure inside the facility, at a cost well in excess of our purchase price. And so packages flowing out of this e-commerce fulfillment center will be shipped through our FedEx SmartPost facility, which is located at the Indianapolis International Airport. So we're seeing like a synergy. It's been a recurring theme, a growing trend, where retailers requiring new omni-channel distribution centers are seeking out locations near our FedEx facilities in order to increase their shipping efficiency. So Monmouth's been really successful in realizing these sort of synergistic benefits as a result of our vast FedEx ground network.
Mike, thank you so much for joining us.
My pleasure. Thank you, Matt.
For more on this and other REIT news and analysis, be sure to visit REIT.com.